Well, if you've been looking for a house, you already know this. Mortgage rates are climbing, and they have climbed to their highest levels in 2 decades. The average 30-year fixed rate mortgage is now 7.08%. That's according to Freddie Mac. And that's a slight increase from last week, but more than double what it was this time last year. So for more on the impact, we want to bring in Javier David. He is the managing editor of business and markets at Axios, not joining us in person this time.
We're sad.
We got pampered a little bit. He come in with his laptop and he's ready with all his information. All right, Javier, what's driving the rise in mortgage rates? I know that's the first question, but I think we know the answer to that, right?
Yeah, I think it goes without surprise that it's all about the Federal Reserve, who's moving in response to inflation. Everything is about inflation nowadays. And so what we're seeing is an interest rate sensitive area of the economy, which is reacting very dramatically to higher rates. So we hence 7.08%. So it's really important to recognize that most people that own a home already have locked in a much more reasonable rate. What we're seeing now in terms of the 7% and above, really affects people who are, were thinking about buying or considering buying sometime within the next year or in the immediate future. It really is prohibitive for them.
So what needs to happen in order for rates to cool down?
Well, inflation needs to cool down. I think that is really the takeaway here. We are kind of at the cusp of another Fed meeting. The Fed has made it very clear that they are going to keep their foot on the pedal. And that means another 75 basis points sometime this month when they meet, when they reconvene, again in December, perhaps. We're getting to the point where markets are hopeful that there's been enough sort of monetary tightening in the pipeline to kind of cool down inflation, that there's a sort of tentative hope that we may be reaching the point at which the Fed will at least hit the pause button. Whether or not that's the case, again, the Federal Reserve has not given any indication that that is going to happen because they are very committed, of course, to arresting this dramatic surge in prices that we see. But the bottom line for them is, or for the markets, and certainly for people that are trying or thinking about taking out a mortgage, there's a hope that maybe at some point we can breathe again, and maybe that point doesn't come most likely before next year.
So usually when mortgage rates go up, the price of a house goes down. And we are seeing that happen to a certain degree, particularly in some of these cities where there were pretty big housing bubbles going on. So your advice to people who are looking for a home, should they just sort of wait it out? Will we see home prices drop enough to make it worth their while? Or, we've talked a lot about the fact that there's a bit of a housing shortage in this country. So I don't know if we'll see the drop in prices the way some people may be hoping.
Yeah, I mean, existing home sales are off year to date about a staggering 23-24%.
That's a lot.
We've seen a tremendous amount of cooling off in home prices. But for some, that it may not even be enough because home prices were so frothy. If you're looking for a home right now, it's still probably not quite the right time, particularly with mortgage rates so unreasonably high. But it really does seem as if 2023 is going to be more or less the acid test for people that want to buy again, or how generous the market has been in terms of prices.
So, Javier, it feels like it's a sunny day this morning with this new economic data.
It is. But I got in here, the sun wasn't even. I thought you were giving
my metaphor, Anne-Marie.
Sorry.
I was about to have a metaphor moment. Anne-Marie's like, yes, it is very nice out.
I'll zip it.
No, you don't have to zip it, but allow me to retort. In the famous words of Jules. So it's sunny. If you look at the numbers today, it's a sunny day out, but rain on the horizon?
Rain is definitely on the horizon. And one of the components of GDP is residential fixed investment, which is i.e. housing. That showed a substantial decline, and that is kind of like a headwind for future growth. So there's a lot of money that goes into the economy that makes its way into the economy based on people buying homes, refurnishing homes, selling homes, et cetera, that comprises approximately 15 to 18% of GDP. So what we're looking at, or what we're expecting, is with these rates climbing the way that they have been, it's going to, even though the numbers today were actually quite, sunny, as you mentioned it.
Thank you.
But a good metaphor. But going forward, given the slowdown in housing, it's going to be a real break on growth.
All right, Javier David, always great to have you, my friend, whether you're here in the studio or from your Zoom location. We love it. Thank you.
Thank you.